What if I told you that some of the most influential players in global finance weren't hedge fund titans or Wall Street power brokers, but everyday housewives sitting at their kitchen tables in Japan? It might sound like the start of a movie, but it's a true story. Back in the late 1990s, while the world was glued to the dot-com bubble and the birth of the euro, a quiet revolution was taking shape in Japan. These women, known as the Mrs. Watanabes, managed to outsmart some of the world's biggest financial institutions, changing the game forever. So how exactly did they do it? You see, back in the late 1980s, Japan's economy was on fire. It was booming so hard that it was second only to the United States. Real estate prices were skyrocketing, and the stock market was climbing higher and higher. But, as the saying goes, what goes up must come down. When the 1990s hit, that unstoppable growth came crashing down. Japan's economic bubble burst, wiping out trillions of yen almost overnight. The country that had been riding high was suddenly in deep trouble. This marked the beginning of what would later be called Japan's lost decade. To get things moving again, the Bank of Japan stepped in and lowered interest rates. Now, interest rates are basically the cost of borrowing money. When they're high, loans get expensive, so people and businesses tend to hold on to their cash. But when rates are low, borrowing becomes cheap, encouraging spending and investment, which is supposed to help the economy grow. But even with rock-bottom interest rates, Japan's economy refused to bounce back. And for everyday people, it meant something even worse. Keeping money in a Japanese bank barely gained any interest at all. But while the economy was struggling, something unexpected was brewing in Tokyo, and it wasn't happening in corporate boardrooms or government offices. It was happening in ordinary homes, led by an unexpected force: Mrs. Watanabe. Now, Mrs. Watanabe isn't an actual person, at least not just one. In Japan, Mrs. Watanabe is like John Doe or Average Joe in English. It's a common name used to represent everyday people. In this case, it referred to the average Japanese housewife. In Japanese households, it's usually the women who handle the family's finances. So when they saw their savings sitting in banks doing nothing, they started looking for better ways to grow their money. That's when they discovered the fast-moving world of forex trading, where currencies from around the world were being bought and sold at lightning speed. Over 1 million Japanese housewives jumped into the financial markets, creating what became known as the Mrs. Watanabe movement. But they had no idea what was coming next. Imagine you're a Japanese housewife managing your family's savings. You want to make that money work for you, but when you look around, nothing is promising at home. Interest rates are so low that keeping your money in a bank feels like just letting it sit there collecting dust. This was exactly the situation Mrs. Watanabe faced. She needed a way to grow her savings, so she got creative. She thought, why not borrow money here in Japan, where interest rates are super low, and then invest it somewhere else where rates are higher? That idea is called a carry trade, and that's exactly what Mrs. Watanabe started doing. The concept is simple. Borrow money in a country with low interest rates, like Japan, then exchange it for a currency from a country with high interest rates, like Australia. The difference between what she was paying in Japan and what she was earning abroad, that was her profit. So she took out loans in Japanese yen at dirt cheap rates, converted them into a stronger currency with higher returns, and pocketed the difference. And just like that, from the quiet of their own homes, Japanese housewives found themselves at the center of a financial revolution. This was the start of the Mrs. Watanabe carry trade thing, a clever financial move that would soon get attention from all over the world. Mrs. Watanabe was riding high, cashing in on the carry trade. And it wasn't just a small group. It spread like wildfire. Before long, thousands of Mrs. Watanabes across Japan were doing the same thing. The carry trade was the hottest ticket in town, and it felt like the good times would never stop. Then came 1998, and the financial world got rocked by the Russian financial crisis. Russia couldn't pay its debts, and the whole global system felt the shockwaves. And that carries trade? It had a dark side. If the yen strengthened against the currency Mrs. Watanabe had invested in, she'd lose money when she paid back the borrowed yen. And unfortunately for her, that's what happened. As panic spread, investors scrambled to move their money to safer places. One of those safe havens? The Japanese yen. The more people bought yen, the stronger it became. What once felt like a golden ticket now looked like a financial trap. The rising yen made it way more expensive for her to repay what she had borrowed. The Russian crisis flipped the script, turning her money-making plan into a major setback. The crisis also exposed a harsh truth. When interest rate gaps shrink and markets shake, even the smartest plays can fall apart. Mrs. Watanabe and her fellow traders got a brutal lesson in just how risky their strategy really was. Back in Japan, things weren't looking great either. The government was fighting its own economic struggles. Even though Japan pioneered the zero interest rate policy in 1999, a new beast had emerged. Deflation. Deflation is when prices across the economy start dropping, making people hold on to their money instead of spending it, expecting prices to fall even further. To counter this, in 2001, the Bank of Japan tried something radical. They became the first central bank ever to use quantitative easing, or QE. Here's how it worked. The Bank of Japan created new money and used it to buy government bonds, essentially IOUs from the government, that promised to pay back borrowed money with interest. This flooded the economy with cash, pushed interest rates even lower, and encouraged borrowing and spending. For Mrs. Watanabe, it was a double-edged sword. On one hand, even lower interest rates in Japan meant there was more money to be made from carry trades. On the other, the sting of past losses was still fresh. The launch of QE marked a turning point for Japan's economy, a whole new way of doing things. And for Mrs. Watanabe, it was just another twist in her financial story. As the new millennium began, Japan was still grappling with economic struggles. But despite the risks, many Japanese investors couldn't resist the allure of the carry trade. With the Bank of Japan keeping borrowing costs low, taking out loans in yen was a bargain, making this trade all the more enticing. Then around 2005, something unexpected happened. Japanese housewives, looking for ways to make extra money, started getting into online currency trading. This is when the world started hearing about Mrs. Watanabe. She was usually in her mid-30s, comfortable with computers, so much so that in Japan they called them clickety-clicks. And she often used her own money, family savings, or even borrowed funds through margin accounts to trade foreign currencies. Back then, Forex trading was an easy way for new investors to get started. The media jumped on the story, dubbing these women Japan's version of the Real Housewives, but with a financial edge. Male investors sneered, calling them kimono-clad Mrs. Watanabes. But these women weren't just playing around. They were moving serious money, enough to rattle currency prices and leave economists scratching their heads. For now, though, Mrs. Watanabe was enjoying the ride. She was living proof that regular people, with some savings and a bit of calculated risk, could make real waves in global markets. But she had no idea that an even bigger storm was coming. The 2008 financial crisis was unlike anything she had ever seen. It started in the US with the collapse of Lehman Brothers, a massive investment bank. As the bank crumbled, global markets panicked, pulling many economies into a deep recession. Just like before, scared investors rushed to safer assets, one of them being the Japanese yen. Demand for yen surged and its value shot up. For Mrs. Watanabe, this was déjà vu. A stronger yen meant paying back her borrowed yen for carry trades was now much more expensive. Panic set in. She and thousands of other Japanese retail investors scrambled to exit their positions. But the market was moving too fast. What had once been an easy way to make money suddenly turned into a nightmare. That's when she realized the harsh truth. While the trading itself might be simple, the global economy that influenced those trades was anything but. Still, Mrs. Watanabe wasn't one to give up easily. Even after facing losses, she kept at it. Many women stayed under the radar, though, since Japanese culture didn't always embrace money made from trading. But she learned from every experience, growing more disciplined, and strategic along the way. After the crisis, Japanese retail investors, including Mrs. Watanabe, started shifting their approach. They moved away from carry trades and began looking for other ways to grow their money. Day trading became one of the most popular alternatives. Carry trades were a long-term game, but day trading? That was fast and aggressive. As the New York Times pointed out, Japanese homemakers had a serious financial advantage. They controlled Japan's massive household savings, a staggering $12.5 trillion. For over a decade, most of that money had been sitting in bank accounts, barely earning any interest. Day trading gave Mrs. Watanabe something she never had before: financial freedom on her own terms. She wasn't just waiting for profits anymore. She was actively making moves, using Japan's savings to influence markets and grow her wealth. Her shift from carry trading to day trading wasn't just personal. It was part of a much bigger trend, not just in Japan, but all over the world. Back then, Japan's economy was massive, bigger than Germany's and Italy's combined. So whatever happened, there wasn't just Japan's problem. It sent ripples across the world. That's why all eyes were on Mrs. Watanabe. Whether she chose to save, spend, or invest, her decisions held the power to shape global markets for months and years to come. Fast forward to today. Mrs. Watanabe has seen it all. She started as a careful budget manager, then dabbled in carry trading, took on day trading, and became a true icon in the financial world. She's weathered financial storms, adapted to shifting markets, and kept moving forward. Even now, she's still a force to be reckoned with. With online platforms making trading more accessible than ever, everyday investors like Mrs. Watanabe can jump into the game without needing a Wall Street address. The financial world isn't just for the pros anymore. A computer, an internet connection, and a little know-how are all it takes. And with her years of experience and sharp instincts, Mrs. Watanabe is right at the heart of it all. What's next for Mrs. Watanabe? As technology races ahead, fresh tools and apps are making trading simpler than ever. But at the same time, the markets are getting more unpredictable. Political shifts, economic twists, and global events are keeping currency values on their toes. For day traders like Mrs. Watanabe, this roller coaster can be both a challenge and a golden opportunity. So will she continue to lead the pack, or will these new hurdles force her to change her game plan? I'd love to hear your thoughts in the comments below. And while you're here, don't forget to like, subscribe, and hit that notification bell so you don't miss out on our next content.